Welcome to the DSMR. This briefing highlights where the smart money is flowing as of this video date. As a quick primer, when smart money is distributing, retail investors are buying and institutions are exiting their position. And when smart money is accumulating, retail investors are selling and institutions are building position. This data, including charts, graphs, and the ability to create bottoming signals, are available to you on bottomfinders.com. Head over there after the video to create a free profile. And with that, let's start the briefing. In communication services, smart money has entered a markdown phase within the entertainment industry. Institution investors are actively pushing prices downward towards a discount zone to generate supply, using declining price action to shake out retail investors. In discretionary, smart money is in a markdown phase for distributors and diversified consumer services, systematically lowering prices to clear out retail participants. Conversely, institutional forces have entered accumulation phase for hotels, restaurants, and leisure, as well as household durables, aggressively buying from supply pool as retail investors exit their position. In consumer staples, smart money is in a markdown phase for beverage, maneuvering prices lower to establish a discount zone. Meanwhile, institutions have officially entered an accumulation phase for food products and personal care products, quietly building inventory by buying from available supply pool as retail investors liquidate. In energy, there's no update. In financials, smart money is currently in a markdown phase for banks and consumer finance, executing downward price pressure to drive retail investors away. Simultaneously, institutional players have entered an accumulation phase for financial services and mortgage REITs, absorbing available market supply from exiting retail traders. In healthcare, smart money has entered an accumulation phase within healthcare equipment and supplies, steadily absorbing shares from retail investors who are exiting their position. In contrast, institutional investors have entered a markup phase for healthcare providers and services, driving prices upward towards a profitable zone to generate retail demand through rising price action. In industrials, smart money has entered a markup phase for aerospace and defense alongside air freight and logistics, pushing asset prices higher to attract retail investors via positive price momentum. On the flip side, institutional capital is in a markdown phase as building products, commercial services and supplies, ground transportation, and passenger airlines intentionally exert downward pressure to seek out the discount zone. Information technology, smart money is firmly embedded in a markup phase across communication equipment, IT services, semiconductors, software and technology hardware, storage, and peripherals. Institutions' desk runners are steadily pushing these prices upward into a profitable zone, driving the positive price action necessary to generate retail demand. In materials, smart money has entered a markup phase for metal and mining, elevating price action toward a profitable zone to cultivate a retail demand on the back of a rising price action. Simultaneously, institutional investors have entered an accumulation phase for paper and forest products, aggressively capturing shares from the supply pool as retail investors choose to exit. Real estate, smart money is in a markdown phase for healthcare REITs and real estate management and development, driving prices down towards discount territory to shake out retail holders. Meanwhile, institutions have entered a markup phase for hotel and resort REITs and industrial REITs, pushing prices up towards a profitable zone to spark retail demand. Utilities, smart money is in a markdown phase for electric utilities and multi-utilities, guiding prices down towards a discount zone to drive away retail interest. Concurrently, institutional forces have entered an accumulation phase for water utilities, systematically buying from the supply pool as retail investors vacate their position. In closing, the goal in investing should be to move with smart money and not against it. And our goal is to find where the smart money is. An ideal bottom for going long is when smart money exhausted accumulation, and that's the dark green lines. Those are the bottoms we look for at Bottom Finders. We will include the text in the video description. If you find this report helpful, show us some love by clicking like and subscribe, and we'll see you at the next one.